investing long-term in equities. In this webinar, we're going to talk about the basic concepts of equity markets, why you should consider investing long-term in equities, what strategy can you easily implement, and how can FirstMetroSec help? First off, let's review some basic concepts of the equity or stock market. The term equities and stocks are often used interchangeably since they are synonymous. It represents part ownership in a publicly listed company. They can be bought and sold in stock exchanges. Individuals and institutions own stocks of companies with the expectation of growth in its stock price and earn dividend income. Due to the short-term volatility of equities, it will be best to use investable funds and have a long-term perspective. We will be discussing this in great detail after this section. One of the most frequently asked questions of would-be investors is, why do companies issue stocks? Companies issue stocks in order to raise capital from public investors to fund business operations such as expansion of facilities, number of stores, and entering new markets. If they would like to introduce a new product to the market, they might also need enough funding for that venture. Companies might also need some more funds to pay off some of their debt. Similar to taking a slice of pizza, private companies take a portion of the business and divide it into a number of stocks. They can then offer this to the public at a certain price per stock, say 250 pesos per share. When a company does this for the first time, we call this the initial public offering or IPO. Companies prefer to issue stocks if they are able to raise more capital than borrowing money. In doing so, they won't have to regularly pay for interest and return the principal. The trade-off is that they have to share a piece of the company and abide with the financial and legal regulations of SEC. After the initial public offering, the stock will now be publicly listed in the Philippine Stock Exchange. The stock market is composed of your buyers and sellers. Those who bought during the IPO can opt to sell their existing stocks at a good price, and we call that the ask price. Interested buyers can also bid for stocks that they would like to acquire at a decent bid price. As a licensed trading participant of the Philippine Stock Exchange, our role is to facilitate the buying and selling of shares of our clients. There are hundreds of publicly listed companies in the local stock market. In order to get the general sentiment of the market, the Philippine Stock Exchange periodically selects 30 common stocks to be part of the composite index. This is like a barometer or benchmark of the Philippine stock market's overall performance. Currently, these are the components of the index. You have SM Investments Corporation, SM Prime Holdings, Ayala Land, BDO Unibank, Ayala Corporation, JG Summit Holdings, Bank of the Philippine Islands, Universal Robina, Metrobank, and the others. These stocks have relatively high liquidity and large market capitalizations. Index stocks are flagship stocks. As what you might have already observed, they share the following qualities. They have a good brand recall. Just a glance of their company logo, we already are familiar with their respective businesses. They also have a good demand for their products and services. You're probably even their avid customer or client. Consequently, they have gained enough traction and captured the dominant market share in their respective industries. They have also been proven to weather economic downturns because of their strong balance sheets. Their financial stability will enable them to survive unfavorable conditions. This level of stability can further help them maintain their long-term growth and share a portion of the profits with investors through dividends. Here are some examples of price performance of index stocks in the long term. This is the historical price chart of SM Investments Corporation. As of April 4, 2020, SM is already trading at 839 pesos per share. If you're considering to buy at this price level, you only need a minimum of 10 shares, which will be around 8,500 pesos. Another example, this is the historical price chart of Ayala Land Inc. As of April 4, 2020, Ali is already trading at 30.95 pesos per share. If you're considering to buy at this price level, you only need a minimum of 100 shares, which will be around 3,200 pesos. When done right, there's really a great potential in building wealth through stock investing. That's why many individuals and institutions invest in equities for their long-term financial goals. However, our path to achieving our goals will definitely not be a straight line. Life will sometimes throw us curveballs, such as suddenly losing our job or being diagnosed with a critical illness. Protect yourself from these financially difficult situations by building your emergency fund and getting an insurance. Without these protective measures, you might be in a position where you have to liquidate your stocks even at a loss. We just finished reviewing the basic concepts of equity markets. Now, we will proceed to the main topic of this webinar. Before we start, let me share with you this quote. Learn from the past, understand the present, and prepare for the future. With human introspection, the past teaches us lessons so we can make better decisions for the future. But one thing is certain, it's that the future is uncertain, as the possibilities are endless. So, let me take this opportunity to remind you that past performance does not guarantee future results. Things may either go our way or another, so we must be prepared to act accordingly. Let's discuss the 5 reasons why you should consider investing long term in equities. I would like to give credit to our market consultant, Mr. Aaron Sai, for sharing to me some of the following studies. I would also like to thank him for his patience, help, and guidance. When I conduct seminars, I usually encounter clients asking themselves the following question. If I invested 100,000 pesos in Philippine equities 10 or 20 years ago, how much will it be thereafter? To answer this question, let's simulate investing 100,000 pesos in common investment options. These are your time deposits, treasury bills, and the Philippine Stock Exchange Index. With an initial capital of 100,000 pesos, here's how each investment option performed in the past 10 years. For the 1-year time deposit, it would have grown to 124,000 pesos. For the one-year treasury bill, it would have grown to 131,000 pesos. If we invested in equities, it would have grown healthier to 256,000 pesos. The 10-year rate of return for equities was at 9.85%. This is higher than the time deposit and treasury bill rate of returns. Furthermore, equities was able to beat inflation during this 10-year period. Thus, our first reason to consider investing long-term in equities is to potentially earn better returns. Now, how about in the past 20 years? Did we still earn better returns? With an initial capital of 100,000 pesos, here's how investment options performed in the past 20 years. For 1-year time deposit, it would have grown to 260,000 pesos. 226,000 pesos. For the 1-year treasury bill, it would have grown to 289,000 pesos. If we invested in equities, it would have still grown healthier to 364,000 pesos. The 10-year rate of return for equities was at 6.68%. Again, this is higher than the time deposit and treasury bill rate of returns. Furthermore, equities was still able to beat inflation during this 20-year period. Thus, reinforcing our first reason to consider investing long term in equities potentially earn better returns. It's good to learn that equities can potentially earn better returns. What if you were not able to invest exactly 20 years ago? Did equities still outperform time deposits and treasury bills, even if year of entry was varied? For this study, I varied the year of entry for each holding period and recorded the respective returns over the past 20 years. Let's visualize this using the 15-year holding periods. The first sample was if you started investing by the end of 1999 and held it for 15 years until the end of 2014. The second sample was if you started investing by the end of 2000 and held it for 15 years until the end of 2014. And so on and so forth until sample 6 that ended in 2019. I also performed the same study for 1, 2, 5, and 10-year holding periods. I then recorded the respective annualized returns for each sample of time deposit, treasury bill, and equities. Lastly, I observed how often equities perform best for the respective holding periods. Here's what I found. For 1-year holding periods, equities perform best 55% of the time. For 2-year holding periods, equities perform best 68% of the time. For 5-year holding periods, equities perform best 75% of the time. For 8-year holding periods, equities perform best 85% of the time. For 10-year holding periods, equities perform best 91% of the time. For 15-year holding periods, equities perform the best all of the time. From the data, it's fascinating to observe that equities perform best most of the time. Equities perform best more than 50% for every holding period. The number of times that equities perform best also improved as the length of holding periods increased. It performed better in longer holding periods. We can then add these two observations to why we could consider investing long-term in equities. We've seen equities performing best most of the time compared to common investment alternatives. Now, let's try to dig deeper by looking at two sides of the coin. When equities perform best, how well did it do? On the other side, when it did not do well, how low did it also go? Here are the highest and lowest annualized returns of equities for various holding periods in the past 20 years. For 1-year holding periods, the highest return for equities was positive 63%, and the lowest was negative 48.3%. For 2-year holding periods, the highest return was positive 49.8%. This was lower than the previous, but it did not lose as much since the lowest return was only negative 26.2%. For 5-year holding periods, the highest return was still lower at 28.9%. However, there was a significant decline in the lowest return since it was only negative 3.2%. For 8-year holding periods, the highest return was only 19.4%, but this time, equities did not return negative. The lowest return was positive 2.9%. For 10-year holding periods, the highest return was 19% and the lowest return is still positive at 3.6%. For 15-year holding periods, the highest return was 15.2%, while the lowest return is already at 8.4%. Notably for this period, the lowest return for equities was able to beat the highest returns for time deposits and treasury bills. As you can observe, the gains in the longer holding periods were not as much as in the shorter holding periods. However, the lowest returns improved and even turned positive at the 8, 10, and 15-year holding periods. Thus, our fourth reason to consider investing long-term in equities, the lowest returns were positive in longer holding periods. Let's study the past 20 years further. You've also probably observed from the previous graph that returns swung from positive to negative rates. One might ask, how much did equity returns fluctuate over different holding periods? The statistical measure of fluctuation or volatility is called standard deviation. This also refers to the amount of uncertainty or risk. In this study, I tried to quantify the fluctuation of the returns by measuring the standard deviation for each holding period. And here are the results. As you can observe, returns were more volatile in the shorter holding periods, but it declined as the holding period lengthened. Thus, our fourth reason to consider investing long-term in equities, risk declined in longer holding periods. In summary, here are the 5 reasons why you should consider investing long-term in equities. First, potentially earn better returns than other common investment alternatives. Second, it performed best most of the time compared to time deposit and treasury bill. Third, equities perform better in longer holding periods. Fourth, lowest returns were positive in longer holding periods. Lastly, risk declined in longer holding periods. To wrap this section, let me share with you this quote from the educated investor. He said that short-term volatility is not necessarily indicative of long-term trend. Sometimes investors get caught up with the market turbulence in the present. However, it always pays to take a step back and look at the bigger picture. This is the monthly logarithmic graph of the Philippine Stock Exchange Index since 1987. Even though we already experienced the Asian financial crisis and global financial crisis, the index has been in a long-term and stable uptrend. For emphasis, I'd like to repeat that short-term volatility is not necessarily indicative of a long-term trend. If you were convinced enough, you might be asking yourself, how can I invest in equities? Lucky for us, we don't need to look any further. First Metro Asset Management Incorporated offers Save and Learn Equity Fund. Professional fund managers actively selects a portfolio of stocks that can provide long-term capital appreciation for investors like you. You can get started for as low as 5,000 pesos. Even with the low capital requirement, you get instant diversification and professional management. This saves you a lot of effort and money. When you decide to top up on your investment, you would only need 1,000 pesos. If you want to be opportunistic by timing your entries and exits in equities, you might also want to consider First Metro Philippine Equity Exchange Traded Fund, or FMETF. FMETF is a mutual fund that tracks the performance of the Philippine Stock Exchange Composite Index. The blue line is the performance of the index, while the violet line is for FMETF. As you can observe, it has closely mirrored the performance of the benchmark. It is currently trading at 86.3 pesos per share, so you will only need 10 shares minimum to buy it. You can start investing for around 900 pesos only. Since this is traded in the exchange, you will need to open an account with First Metro Securities. Please let us know if you're interested so we can help you get started. Legendary Peter Lynch even said that equity mutual funds are the perfect solution for people who want to own stocks without doing their own research. And that quote says a lot. So, by now, you might be telling yourself, I'm inclined to invest in equities for the long term. Is there a simple strategy that is easy to implement? The answer is yes. Let me share with you a simple and easy to implement strategy that can help you get started as soon as possible. We call this peso cost averaging. All you need to do is invest a fixed amount at regular intervals, regardless of the market trend. You can do this either twice or once a month on a consistent basis. Let's try to put that into action. First, set your own schedule for investing. Let's say you will do it every 15th of the month. Second, you need to determine how much you're going to invest initially and your succeeding amount. For this example, let's use the minimum initial amount of 5,000 pesos and 1,000 pesos additional. Third is your personal investment horizon. In this case, a period of 20 years. Lastly, is to choose your investment product such as FAMI's Save and Learn Equity Fund. In this scenario, you would have contributed a total of 125,000 pesos. When invested in a conservative 8% cumulative annual growth rate, the projected portfolio value will be at 592,000 pesos. This is the beauty and power of peso cost averaging over a long investment horizon. Peso cost averaging might sound easy to execute at first, but is challenging to maintain the discipline consistently. Save yourself time, effort, and money by automating your investing experience through our voluntary investment program. I personally subscribe to this, and it feels empowering to know that I was already able to save and invest even before receiving my salary. If you want to do this too, get in touch with your respective HR heads to get started. Let's look at this final example. These young professionals, Paul and Mark, want to prepare for their retirement 30 years from now. Paul decided to start investing today, while Mark decided to do it 10 years later. Since Paul was still new at his job, he can only afford to invest 1,500 pesos per month. In 10 years, Mark was already able to receive salary increases, so he decided to invest 3,000 pesos per month. They both decided to invest in FM ETF. Since Mark invested more per month, he was able to accumulate 720,000 pesos. Paul was only able to contribute a total of 540,000 with his monthly contributions. Upon reaching retirement, Mark was able to grow his money to 1.7 million pesos. Not bad, right? On the other hand, Paul was able to grow his money to 2.1 million pesos. Better, right? When you think about it, this seems counterintuitive since Mark invested more money than Paul. However, Paul started earlier than Mark. When it comes to investing, time is gold. It doesn't matter if you start small, as long as you start as early as possible. So, when should you start? You should start now. Do you want to have these features at your fingertips? Open your FirstMetroSec stock trading account now. Here's how in 3 easy steps, all online. First, visit our website www.firstmetrosec.com.ph and click on Open an Account. Second, complete the online form with your username, password, and basic account information. Third, upload your required documents online. And you're done. No need for personal appearance and printed documents. Easy, right? For inquiries, please feel free to email account opening at firstmetrosec.com.ph. Upon submission of your complete requirements, kindly give us 2 to 3 business days to activate your account. You only need one account for all your investment needs. You can gain access to your portfolio using your laptop, desktop, tablets, and even your mobile phones. You can even easily trade online anywhere and anytime using FirstMetroSec Go, the most advanced mobile trading app in the country. I also encourage you to follow us our social media platforms such as Facebook, Twitter, Instagram, and YouTube. Search for us using the handle @FirstMetroSec. Despite the lockdown, we have continuously been aggressive in coming up with webinars to reach out more people. Catch them in our YouTube channel where we upload saving and investing webinars. All these features and convenience within your reach by Finance Asia's back-to-back best broker for 2017 and 2018, International Finance Best Online Broker, and Best Online Trading Platform. With First Metro Securities, you only need one. Again, this has been JP Billones, wishing you a good afternoon.